Hello and welcome to day number 89 of our Travel Trader series, and today I want to talk to you about something that we call the Awesome Oscillator, or the short version, as you can read here, would be AO. So the Awesome Oscillator is what we call a momentum indicator that tells us when momentum is changing from, let's say, up to down, and we can use it to generate some trading signal. But first of all, let's talk about what the AO, or the Awesome Indicator, actually does. So basically, we are looking at something that we call a simple moving average. So that's the moving average of the prices, and we are calculating the 34 simple moving average and the 5 moving average. So we have 34 and 5. And the big difference in the Awesome Oscillator compared to other momentum indicators is actually that these moving averages are not calculated on the closing price. Just to show you the difference, so normally here we would have the closing price, so that's where this candle ends, or here this would be a closing price as well. So that's where the candle, the upwards candle, ends, and of course on the other side, downwards candle would have a closing here where the body is ending. Now the difference is that the AO doesn't calculate the closing price, it rather calculates the middle price, so the midpoint of these bars, and that's a little bit different from most other indicators. And this generates these histograms that we can see here. So a histogram is actually nothing else than one of these bars here, and as it is an oscillator, it always kind of oscillates around zero, can go up and down, but this is basically how the AO looks like. Now we have two things actually that we can look for to generate some trading signals. So the first trading signal would be when we see here we are crossing the zero line, so we're coming from upwards and we're going downwards. That's basically telling us that we have a change in momentum, and when we mouse over here we can see that here we have the value of minus 1.3, so that's the change. The day before we were at 33.8, now it's minus 1.3, so here we have a change, and from here on we would think that prices would go down, and obviously that was right. If we move a little bit further here we have the different signal where we come from below zero, we have a change here in zero, and that tells us, okay, prices are likely to go up, which they eventually did. So that's the first way to interpret the Awesome Oscillator. We can have a look for changes and crossings in the zero line. Now there's a second thing that we can look at, and that is called twin peaks. And we have a bullish variant and a bearish one, and basically we see one here. So what does a bearish twin peak mean? So we have a peak here, we have another peak here, and the second peak has to be lower than the first one. So that's the first thing. This second peak has to be lower than the first one, and then we gotta have a change in color, so we have to get from green to red. So this here would be the candle where we actually change from green to red. If you have a look at this, that would have even told us earlier to go down and to short the market, so here we would have an indication. Now we are likely to go down, or there might be a change in the momentum. Here we got, you want to call it a confirmation, and since then we're kind of going down. So that's the second thing we can look for. However, the Awesome Oscillator, as with everything else, is not meant to be the single only signal generating tool that we use. So it's just one of the things that you can use, but I wouldn't trade it on its own. Although in this scenario here, it looks very, very well. Now, if we would have a look here, well, that's basically even a triple peak if you want to, but if you look at this one, we have a double peak here, the bullish version, and we had a red histogram here changing to green. So this candle here, that would have given us a first indication that momentum changes in an upwards direction. So price went up, later came down, had a change here again, had another change, and then went up. So as you can see here, trading this signal likely wouldn't have made you as much money. Anyway, it's a great tool if you want to find out whether momentum is changing, and when momentum is changing, that can be a change in direction for the prices as well. So these are the two things that we can look for. Summing it up, the Awesome Oscillator is calculating the difference between the 34 and the 5-period simple moving average, not on basis of the closing price, but on basis of the midpoint. We have two things that generate signals. One is the crossing of the zero line, which changes, or which is an indicator that momentum is changing. So now we might see a change in prices going up or going down. And we have twin peaks where we have to have two different peaks. The second one, in terms of for the bullish version, needs to be lower than the first one. Sorry, in the bearish version, so the second one needs to be lower than the first one. And we need to have a change in color from green to red. So this here would be the signal for the bearish one, and vice versa. If we are coming from below and the second peak in the bullish version, so let's see, maybe we find a nicer one. So when you look for a picture perfect version, so let's use this one here. So we have the first peak, we have the second peak that is smaller, and here we see, and here we see a change in color from red to green, and this would be the indication for a change in momentum. We would get another indication here, another change in the momentum, and that's when we indeed started to go up. So I hope you liked the Awesome Oscillator. If you have any questions about it or want to know more, please let me know in the comment section. Otherwise, I will see you again tomorrow, and we will be back in the markets and see that we can earn some money. Thank you very much for watching. Have a great evening, and